All right, let's talk about the 2026 housing market because it's shaping up to be a real puzzle. On one side, you've got good news. Homes are getting more affordable. But on the other, well, the experts are starting to sound the alarm. So what's really going on here? This is the big question, right? It seems totally backward. If mortgage rates are falling and houses are technically easier to buy, why is there so much worry in the air? The answer, as you're about to see, is way more about human feeling than it is about numbers on a spreadsheet. So here it is, laid out plain and simple. On the left, we've got falling mortgage rates. That should be a huge green light for anyone looking to buy. But on the right, you have economists warning about a significant headwind. It's like the market is trying to accelerate with a massive brake being pulled. So what is this invisible force? What's the headwind? Well, it isn't inventory, and it's not just interest rates. It's something much more personal. It's economic anxiety. And it turns out that feeling is powerful enough to change the direction of the entire housing market. And we know this isn't just a hunch. A recent consumer survey from the real estate data firm Bright MLS makes it really clear. This isn't just a New York thing or a California thing. This financial stress is being felt by pretty much everyone, everywhere. And when I say everyone, I mean it. Get this. A staggering 80% of renters who were surveyed said they are worried about having to cut back on essential spending. We're talking about groceries, gas, the basics. That's 4 out of every 5 renters feeling that squeeze. But hold on, it's not just renters. The same survey found that almost 3/4 of people who already own their homes feel the exact same way. That tells you just how deep and widespread this financial unease really goes. This chart just puts it all into perspective, doesn't it? Whether you rent or you own, the odds are you're feeling worried about making ends meet. This right here, this pervasive sense of unease, that's the headwind the experts are talking about. Okay, so we know that people are worried, but the survey dug even deeper. It shows us exactly who is feeling the most pressure, and that gives us some really important clues as to why this is happening right now. So, while this anxiety is definitely widespread, it is not felt equally. The data points a finger directly at 3 groups: renters, folks in lower income households, and, you guessed it, millennials. They are the ones bearing the absolute heaviest burden here. A big reason for this split is something economists started talking about back in 2025, the K-shaped economy. It's a pretty simple idea, really. After a downturn, the wealthy and higher income folks recover just fine. That's the top arm of the K going up. But for everyone else, things either stay stagnant or get worse. That's the bottom arm of the K going down. And of course, a huge, huge piece of this anxiety comes down to our jobs. This is a big one. Over 60% of adults in the survey said they were worried about losing their job or having their hours cut. That is a massive cloud of uncertainty hanging over people's heads. Now, while those job worries are pretty common across the board, the data shows that for one generation in particular, this constant economic instability isn't just a phase. It's been their entire adult life. I mean, just think about the journey of an older millennial. You enter the workforce right in the middle of the Great Recession. Then, just as you're hitting your stride, building a career, starting a family, the COVID-19 pandemic turns the world upside down. And now, in 2026, when you're finally ready to buy a home, another wave of uncertainty hits. It's just one economic shock after another, which creates this deep-seated caution, this feeling like you're always waiting for the other shoe to drop. And all of that brings us right back to our original question. Once you understand this deep-seated anxiety, it starts to make sense why lower mortgage rates just might not be the magic bullet everyone is hoping for. This quote from Bright MLS chief economist Lisa Sturtenvent just hits the nail on the head. A home is the biggest purchase most of us will ever make. If you're genuinely worried about your next paycheck or being able to afford groceries, a slightly lower mortgage rate probably isn't enough to convince you to take that enormous leap. So that feeling, that personal hesitation, you multiply that by millions of potential buyers across the country, and that is your significant headwind. It's a powerful and visible force of caution that's pushing back against all the positive momentum from lower rates. So let's put all these pieces together. What does this all actually mean for the 2026 housing market? Well, here's the official forecast. You've basically got 2 giant forces in a tug of war. The driver, or the gas pedal, is all that pent-up demand. You know, tons of people who have been sitting on the sidelines just waiting for rates to drop. But the brake pedal is that widespread economic anxiety we've been talking about. One force pushes forward, the other pulls right back. And when you have these two massive forces essentially canceling each other out, the expert consensus is that the market is going to be, well, pretty muted. It's not a crash, not by a long shot, but it's definitely not a boom either. So if there's one phrase to remember for 2026, it's cautious progress. That's the key takeaway. It means we're probably going to see a bit more activity than in the last few years, but buyers are going to be really hesitant. Sales will likely move pretty slowly. It's a small step forward, sure, but it is not the giant leap back to normal that so many people were hoping for. Which really leaves all of us with a final question to think about. In a market that's defined by these competing forces of hope and fear, what does cautious progress actually mean for you and your own financial plans?